Okay, really quickly today I want to do a mini lesson on how to do a cash flow analysis yourself and a comparative market analysis to figure out if you're getting fair market value or not on any property investment, whether that be pre-construction, resale, whatever. Charles! Come here. Come here. Why? For what? Do they want a condo? Okay, so we're going to compare two developments. First up, 36 Zora, right here. This one is in Etobicoke and it just started selling this weekend. This one's very, very popular. They're spending a ton of money on marketing. The next up is Scout. Scout is in the Junction, and this one has been selling for 6 to 8 months, about 65–70% sold out, but it's a perfect comparison because price per square foot is very similar. And rental rates in the neighborhood are very similar. So I'm going to go through how I would figure out and determine what unit's going to give me better cash flow, what's a better investment, for any investor that I work with. So for those of you not familiar with Toronto's neighborhoods, this is 36 Zora, this would be 427, Sherway Gardens, IKEA, and the Gardner here. It's just off the Queensway. And this is Scout Condos in the Junction. This would be this. Okay, so we're going to pick a unit. We're going to skip right past these small ones, and the reason is because 440 square feet, 468, can be difficult to get AAA financing. The other reason is when agents have been advertising this project as in the 300s for months now, you know that there's likely less than 20 units in the entire building that were ever at that price, and these are just starting prices, so as soon as you go up a couple of floors, unless you get the ground floor one, you're not paying those prices, right? So we're going to take a more realistic unit, a more livable unit, 506 square feet at 420,000. Keep in mind starting price. So we're going to say 420,000 for 509 square feet. Okay. Next consideration is what's the total price, because that's just the starting price. Do you need parking? Well, easiest way to do that is to hop on over to the Toronto Transit Explorer, courtesy of Sidewalk Labs. Zoom in, and boom. So this is how long it's going to take you to get to, for example, the financial district in Toronto without a car. So transit's going to take you about an hour. As someone who lives in Humber Bay community right here, believe me when I say there is no way you are going to want to buy an investment unit in this area without parking. So we're going to add 40K for parking. Okay, so we've added our parking. Keep in mind this is if we get the lowest floor available in the building. Likelihood of that happening is slim to none, so let's assume we have to go up 5 floors. Every floor costs you $1,000. So 465 is our actual final price. All right, so Scout Condos, the A10 is on the 3rd floor for 483,000. 4,590 square feet. That's a 9. Same idea. Do we need parking? Well, the Junction is definitely a less car-dependent community. You're right on the St. Clair West streetcar, so you can get to St. Clair Station very easily, and then it's only a 33-minute transit trip to downtown Toronto. Another thing you can do is you can look at a recently completed resale condo and see if those units are selling fine without parking. So this is the Duke Condos. This is in the Junction neighborhood, and this was completed just 2 years ago, so it's a perfect one-to-one comparison. And if you look, the recently sold units, sold 535,000, no parking. So 541,000, no parking, parking, no parking. We don't need parking, so we're going to leave the price as is. Now, gross price doesn't tell us that much because, this one's 590 square feet, this one's 509, this one might be cheaper, but it's smaller. So we want to know what the per square foot value is. If you bought a condo before, you've probably heard realtors talk about PSF. All it means is how much am I spending per foot? So if you don't know how to calculate, that's pretty simple. You take gross price, okay, and you divide by the square footage to figure out what you're paying per square foot. So in this case, we're paying 818 PSF over here, and over here we're paying 913 PSF. Keep in mind this one's elevated because we do have a parking addition. If you were to remove that, this one's probably in the high 800s, 875 or so, but we do know that in this community we're going to need parking for resale, and this one not so much, so it's a fair comparison for that reason. But this alone doesn't mean that this is the better deal, because this is a different neighborhood. Obviously, Yorkville is going to be a much higher per square foot than King West, and King West is going to be much higher than Square One. So we've got to actually look at resale comparables in each neighborhood to figure out if this is fair near the Queensway, and if this number is fair in the Junction. All right, so to figure out if you're getting a good deal, we want to find out if resale listings in comparable buildings in this neighborhood or this neighborhood are selling at these numbers, if these are in line with reality. Okay, so I like to hop over to condos.ca, find the neighborhood, zoom into the area, and find a nearby building. In the case of 36 Zora, there's a direct comparable. IQ, Park Towers at IQ, the second phase of IQ condos, is literally at 15 and 17 Zora, so it's right next door, and it was completed just a year ago, so it's a pretty new building. About as close as a direct comparable as you can get. By the way, ignore listings. Lazy realtors like myself list these under value, and what happens is they create bidding wars, and so this isn't an accurate reality of what things are selling for. You want to go to the actual for sale price. First thing we're going to notice is the average per square foot value of the last 45 sales over the last 12 months has been $778 per square foot. So that's not in line with 913, but we want to actually look at one bedrooms, because keep in mind 3 bedrooms and larger units will drag that average down. 1+ dens seem to be trading at $750 a foot, 1 bedrooms at $840 a foot. So let's take let's take this as our best case scenario. $840 per square foot is what a 1 bedroom is worth in this area. We're paying $913, so we're paying roughly a $50 per square foot premium on pre-construction in this instance. Okay, so we know that the resale market is at $850 at the top end per foot for a 1 bedroom. What that essentially means is if you could buy the exact same unit at IQ Towers, you're looking at $850 multiplied by 509 square feet, you would pay $435. So this is effectively what the unit would be worth today if it was ready today. What that means, in theory, right, is you're paying $465 for a unit that on the resale market is worth $435. Okay, so you're buying into negative $30,000 in equity, and this is not uncommon. I don't want you to think that this is an exceptionally bad deal. Pre-construction lately mostly is a little bit more expensive to buy. You're buying something new, you're leveraging the property market, you haven't assumed the debt of a mortgage, and so a lot of investors still go forward with it. But it is important to know that you're not getting a discount from buying pre-construction. You're actually paying a premium. If the market doesn't go up, you've lost $30,000. That's important to be aware of. You are speculating. All right, so the same idea for Scout. In the Junction neighborhood, we've got a condo called Duke Condos. It completed 2 years ago. It's a low to mid-rise, very similar to Scout. It's trading resale at $896 per square foot. And if we look at resale trends, we're going to see 1 bedrooms trading at $938 per square foot. And if we look at recently sold options, 500 to 599 square feet for $535,000. Again, no parking, so it's a direct comparable. We hop over to the Heintzman nearby in the Junction, but 8 years old, so a lot older. Again, you're seeing $851 per square foot. And resale, we're seeing $900 per foot on the 1 bedrooms. So $900 per foot is a fair number for the Junction. Okay, so we know Scout is worth somewhere around 900 PSF, but I'm a pessimist. And I think as investors, it sometimes makes sense to play worst case scenario. So let's round down further. Let's say it's only worth $875 a foot because, I don't know, it's only on the 3rd floor, or south is an obstructed, actually south is the best view, but whatever, let's round down anyways, okay, right? It's $875 a foot, worst case scenario if we had to sell it tomorrow, right? Type of thing. So this is your resale market value. So you take this, you multiply it by, same situation we did here, you guys know, 516,000 is what it would be worth if it was ready today, in theory, right? So same situation. In both instances, we're buying a pre-construction unit, which means we're actually buying the right to own an asset should said asset ever complete. That's what you're buying. You're buying a contract in pre-construction. In this case, you're paying $30,000 more than the actual thing would be worth if it was ready today. In this case, you're paying $33,000 less. So here, you're walking into a negative equity situation. Here, you're walking into theoretically positive equity situation. That is the difference between picking your projects carefully and knowing how to do the due diligence yourself.